Trend No.5. So you've already been hearing this whole idea that Bitcoin is gold of cryptocurrency. What is the difference of 1.0, 2.0, and 3.0? And I'm not going to go into the technical details as much as what does this mean in terms of the future and where things are going. All of the cryptocurrencies are based on the blockchain, which means every single unit is something that can be tracked and is trackable and can be also authenticated to say, yep, that's a proper transaction. And you can look back in time and see exactly what happened with it, which is why you don't need a bank to do those things. Then eventually you won't need accountants. You won't need lawyers. Lawyers are there just to basically go through the paperwork, go through the details, and then actually prove that something was signed. Well, if it's signed on the internet and verified, then it can just be done immediately. You can walk into a house, say, yep, I want to buy this house, and click a button, and then straight away it's yours, right? Like that's what's going to be happening in the future, where anything that is at lower cost, faster, is going to take over from the long periods of times we have right now. You know, there used to be a time if you wanted to go on holiday, if you're able to leave your country and go to another country, where you would have to go to a travel agent and you have to wait a day to see if they could book a flight and book a hotel. Now you can just go online and just click and it's done, right? And so exactly the same is going to be happening with all transactions and even all agreements. So blockchain 1.0, very, very simple. Who is the one who's getting paid? It's the one who's mining or coming up with the Bitcoins, right? And that's called proof of work. And it's very expensive because you're having to mine all this Bitcoin to come out. And there's a limit of 21 million of them. So it's the one thing that is limited, and where you're actually doing 4 to 6 transactions per second. So it's very slow to actually verify and check everything out. But that's where everything started from. And then from that 1.0 came along a 2.0. And a good example of that is something like Ethereum. And this is where you actually had ability to add on top of Bitcoin smart contracts, which allows you to say, okay, well, when I'm actually paying this, I'm paying this together with a particular agreement between us. So if you actually want to do something like an NFT, that's a smart contract. You're adding something to it to say this has ownership to something. If you're going to buy a house, then it has ownership to something. So a smart contract is programmable, which means there's information coming with it, but it's also much faster. It can go to 7 to 14 transactions per second. There is now something that started going on, which is called Ethereum 2.0, which is called proof of stake. Proof of stake is very, very different. We're going to talk a bit about staking coming up. And don't worry if it sounds a bit technical, but just think about it, that if you actually had something like a phone, right? And if I said, okay, well, who's going to get paid for this phone? I'll say, well, whoever built the phone gets paid, right? That's how Bitcoin works. That's proof of work. But if someone comes along and says, well, look, you know, the person who built it is long gone, right? It's gone somewhere else, but I now own it, right? And this is still valuable and people are passing it around. So pay me because I actually own it, or at least I'm actually giving it to you to stake into the network. And so when you stake your Ethereum, for example, you then get paid for it. Bitcoin here, this is a great article, by the way, Demystifying Bitcoin's remarkably accurate price prediction model, stock to flow. What this is about is the fact that right back from the beginning of time, back in 2010, there was a prediction of what would be happening based on the fact that Bitcoin does something called halving. And every time what you're doing at that point is you're then seeing a change in the price as well. And the price model of what Bitcoin's worth has been following this predictably for the last decade. You can see here, this is logarithmic, which means this is $1. When it hit Bitcoin, $1 was around 2010. It got to $10, right, by 2012. It got to $100. So we're going up by 10 at a time. It got there by 2013. It got to $1,000, right, by 2017. It got to $10,000 by 2018. And you can see every time it goes up at once you, and then you have the halving, and then it drops back down again. It went slow from 2018 to 2020. Then it started really taking off in the mid-20s. And now it's gone to where it is. And you can see it's going to keep on going up based on this because it's been predicted all the way through, which means we could be seeing by August time around $100,000 of Bitcoin. It could go even as high as 200,000 before it drops back down again. But then expect over the next 2 years, unless something totally different changes in demand changes and so on, expect it to be fairly flat, but then it will go up again. And look, this is getting to 100,000. Then it goes up to 1 million, right? So this is where it's heading next. This is why it's called crypto gold, in that there's a predictability to it. It's more predictable than gold because it actually has a limited supply of 21 million Bitcoin, and that's it. Now, if you take that and say, well, then we can actually see when events are happening within Bitcoin. What's the difference of Ethereum? Most NFTs are on Ethereum. This is why Ethereum's gone up so much this year, because there's much, much high demand for all the smart contracts. This gives you an idea of the Ethereum DeFi network, which is all of the different apps and all of the different marketplaces and everything that's built off Ethereum. And this isn't even all of it. It's just the tip of the iceberg. And all of the major cryptocurrencies have these ecosystems that people are building off. This here, Valid Points 2.0 validators. Let me share with you what this means. In the last month, there was over $60 million paid out to those that were mining Ethereum. If you actually look at it in terms of validation, which is basically staking, then this basically is how much is going on there. And look how much has grown. It was a 0.2 million in the beginning of last year, 200,000. It's gone up to over 3 million, and it's on a vertical, right? So we will get to a point where the validation of Ethereum will go higher than the mining of Ethereum. 2.0 is now at more like 7 to 14 transactions per second, but it's also meaning you're not spending all this energy to mine it. which means basically it's much greener. And 3.0 is not even trying to transition from one to the other. 3.0 is where you're actually building, again, smart contracts, just like Ethereum, but it starts as proof of stake. And you're actually now at a speed of like 100 to 100,000 transactions per second. So this is the future of the internet, where fees go down to effectively zero on this as well, where it's far more efficient. And if you've heard of the Cardano, Polkadot, these were all started by co-founders of Ethereum. Massive catalyst coming to Bitcoin, Ethereum, Cardano, and Polkadot. If I just open Cardano price to double in August, Ethereum 2.0 upgrade that's happening, this will be one of the big things that actually shifts. July 2021 is the Ethereum Optimism upgrade. So the launching of all the smart contracts on Cardano is happening this August. So that at that point, the usability goes up massively as well. Just in the same way Bitcoin went up massively as a result of it being accepted by PayPal and Visa in the last month. If there's one thing that I would recommend that you all go have a read of, if you are a bookworm, this is the Coinbase SEC filing for their IPO. And these guys are right at the middle of it because they're the ones that are actually making all the money from all the transactions. Coinbase is not the biggest exchange. There's bigger exchanges like, Binance, but like Coinbase as basically a most popular exchange or the first to go listing, this here actually goes through not just here's what's going on for business. They map out the full picture. It's like it's hidden in plain sight. This is what's going to go on with the financial system. We're taking it apart, right? And then it actually goes through economic freedom of what this then means, how they've actually then grown the model and what's going to happen with Bitcoin, what's going to happen with currencies. And then it goes into a lot of detail, right? But it's super, super interesting. If you read the letter from Brian Armstrong, who's the CEO, further down, there's all these different really interesting graphs. So here we go, right? So here's where we're actually showing what the Bitcoin price is, what the cycles are. So we've just started on cycle 4 right now, which is exactly what I was showing you, which is where we actually now are having this whole growth phase, what's going on with market capitalization, what this means in terms of the change in the marketplace, what the actual different ways are that like all the things I've been talking about is here in like financial detail. And this has allowed Coinbase to become a multi-billion-dollar business. It's going to hit $100 billion fairly soon. And if you don't really understand cryptocurrency, start investing in companies that are involved in this space, just like Kathy Wood is, right? Because it gives you all the details and explains it as well. This summary slide here shows the difference of the three. So if you take Bitcoin, energy consumption a year is like 77 terawatts, which is the same as Chile. Ethereum is 14, which is the same as Slovenia. Like, look at the difference of like Cardano, like 0.000052, like almost nothing. The transaction fee, if you can see here, like how much it costs, $20 compared to 20 cents, the speed at which it actually is delivering it. Smart contracts coming Q2. This is about to happen. So if you're in our community, we'll be there sharing this as it's happening, right? You'll see all of this as we go through that mark as well.